Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
Two minutes ago, here into the closing bell on this Wednesday, July 29th, Fed Day, also mega cap earnings, and we are at session lows as we head into the closing auction here on the trading floor of the New York Stock Exchange. The man himself, the great Peter Tuchman, the Einstein of Wall Street, joins us now. Peter,
wow.
Look at this.
Yeah,
wow, it's right. Look at this S&P today.
Day.
We were down, and then at worst talked, we went up, and then what happened?
So you know what, look, I look back in history a little bit. It's very common that on Fed Day, you have a positive reaction to what the Fed's saying, especially when he was giving us a lot of good stuff. Productivity was good. Inflation, though a little bit sticky, was not so bad. And he presented a picture of, it was 9-3 on the vote, so not a lot of dissemination in the ranks there. And so the market was reacting positively. You've got, look, there's the analysis of it, and then there's the gut feel and the gut reaction. And then wait till tomorrow. Tomorrow is where the market will really show you what it thinks of the information. This was literally from the minute he started talking was the rally, and the minute he stopped talking was the sell-off. And so look, people shouldn't put their teeth into Fed days. Fed days tend to be an emotional gut reaction and then sort of a follow through by people who are a little more observant on what's going on.
Yeah.
So look, one day does not make a market. It is a bit painful to close on the lows. Are we closing on the lows? We are.
Yeah, we are.
Question is whether we gap down tomorrow morning and have some capitulation. Everyone, we need to try and understand and figure it out.
Thank you for being here. Time now for the closing bell. Kevin Warsh and the FOMC leaving short-term interest rates unchanged on the day. A bit of a family fight maybe that Warsh had been looking for. 3 dissenters, however, voting to raise interest rates 25 basis points. Kevin Warsh a few hours ago saying the Fed will, quote, not hesitate to act on inflation. We did finish the day in the S&P 500 at session lows. Your tail of the tape, the S&P down 1.5%. What a stunning downturn from where we were really at the top of the 3 o'clock hour, which we were briefly in positive territory, believe it or not. The Dow down more than 2%. The New York Stock Exchange Composite Index in the red, 1.1. The small caps down 1.6. Energy staples are your leaders in the S&P, and that's basically about it today, folks. Industrials down 3%. Tech stocks hammered. Financials, similar story. To the Dow we go. Salesforce, Chevron, Walmart. You do have some outperformers, but plenty of sell-side pressure. Caterpillar down 7%, Goldman Sachs down 5%. That explains why your Dow is down more than 2%. It is a price-weighted index. Those are your most weighted stocks in the Dow. JP Morgan also down 3.5%. All this and much more sets the stage for mega cap earnings coming up within the next few minutes. We'll hear from Microsoft and Meta, a few consumer brands like Chipotle and Starbucks as well. Let's bring in Karen Mann, a fixed income strategist at Federated Hermes. It's nice to see you here today. Wow, we've got a lot.
So much
to go through.
So much.
I guess let me get your take here on the Fed. We get 3 dissenters. They said, hey, we're concerned about how sticky the state of inflation is. Maybe we actually consider bumping interest rates here. What did you see today and your thoughts on the September meeting?
Yeah, thanks. Great to be here with you. So, 3 dissents from the Fed. Commonly thought that we would have 2, maybe even only 1. So 3 speaking powerfully to the market that the Federal Reserve Bank presidents are considering inflation too high here and would rather act. But it is an entire committee, the governors as a whole, largely sitting at neutral and holding the vote. So what you're seeing is a hawkish hold from the Federal Reserve that many thought, me included, would be enough to temper the market expectations, but in fact we're seeing the front end of the yield curve rally come down in yield, while the long end did not like this at all. That's the opposite of Fed Chair Warsh's first presser and statement, the exact opposite.
So I was tracking this in real time, moments before the show started. The 30-year Treasury yield finishing at 5.203. That's a significant move in just the last few minutes of the day. That's the highest the 30-year Treasury yield has been since 2007. Is that the results you were expecting? And if not, is it a bit of an overreaction?
It's likely a bit of an overreaction. I think that we will temper as we trade into understanding the statement more, but the Fed prices the front end of the yield curve. The bond market prices the long end. What the bond market liked the last time was the emphasis on price stability, and we will get this job done. Coming in today with the market leaning heavily toward the potential for a hike, 30 to 40%, and then fading that to a hold, that wasn't enough for the 30-year. The 10 and the 30-year are very much worried about inflation. The other difference, and I'm sorry to mention it, but it's geopolitics right now. Geopolitics very much in the equation with oil prices elevated and the skirmish is back on.
Yeah, we've been reminded of that as we look at the inverse relationship between equities and oil on a lot of these intraday sessions. Inflation. Now, it's interesting. We came into this FOMC meeting cooler than expected CPI. Wholesale inflation was better than expected, but overall we're still dealing with a high inflation environment. Are you surprised to still see consumer spending in this ecosystem be as strong as it is?
It has been very, very interesting because oftentimes I think when we speak about price and inflation, you can think that perhaps the wallets are closing. But the consumer has a job and feels good about the prospects for their personal economy, so they continue to spend, although they are discerning and value-oriented. But value-oriented means different things to different people. So again, the wallet is open, consumers continue to spend on experiences and on enjoying life, but the real key here is the strength of the labor economy, and that's what's keeping the spending going.
You mentioned geopolitics. We've talked plenty about Fed uncertainty, the state of inflation. What does this mean in terms of an approach for the market to favor active management, especially in this environment? How are you thinking about how investors should approach a lot of uncertainty? Uncertainty, once again, whether we want to or not, it's the word of the day.
And we think that that definitely leans toward focusing on active management. From where the Federal Reserve is positioned now to give us less forward guidance, some are going to get the call right and others will get it wrong. So active management, moving toward the portfolios, active decision making can definitely add alpha in this type of environment. And that's a key difference from where we were even just 3 years ago.
Karen Manna, really grateful for your take today. We'll see what Microsoft and Meta have to say. We've got Amazon and Apple tomorrow. We also have PCE inflation print tomorrow. This is quite the week. Really grateful for your time today.
No rest, thank you.
No rest, this is what all the caffeine is for. We'll talk with you again soon. Thank you for joining us today.
Thank you.
Here are a few of the top analyst calls that moved the tape you may have missed this morning here on Wall Street. First up, Citi reiterating its call on Disney as a buy, but lowering the price target to $135 ahead of earnings. Shares down about 12% year to date. They are set to report quarterly results next Wednesday, August 5th. Howie, ready for this? We're going to a little bob and weave right through the crowd. We're going to go this way. Excuse me, folks. Thank you very much. Next up, Baird downgrading Caterpillar to neutral from outperform. This is a big one today. They say it thinks the stock will be hurt by local data center restrictions. What a story. Despite a recent slump, still up 40% on the year. Finally, Morgan Stanley upgrading Cheesecake Factory. That's right, to equal weight following earnings. Maybe getting that World Cup bump from all those global soccer fans who came here to the U.S., had to see the place for themselves. Shares reaching an all-time high today, now up more than 90% year to date. Why you gotta fight with me at Cheesecake? You know I love to go there. Let's take a look at two stocks that call the New York Stock Exchange its home here. Howard, how about Ford? It's nice to see some green on the screen. Citi upgrading the stock to a buy, saying it sees a momentum shift after earnings. 18 analysts on Wall Street currently cover the stock. Only 3 of them have buy ratings. Ford up more than 2% today, up about 20% on the year. Howard, how about a look here at Garmin? Do not adjust your screens. That says more than 16% of an intraday gain, the best performer in the S&P 500 today. Monster day after reporting a big beat on earnings this morning. They also raised their annual forecast on strong demand for advanced wearables. Big point of interest. Shares now in the green, 45% since the start of 2026. Yesterday, FinTech TV lead anchor, Remy Blair sat down with DTTC's Tom Sullivan. They discussed the ways they are bringing Wall Street assets on chain and, of course, a lot more. Take a look.
When it comes to institutions and using this process, how much time do you think will actually be saved through this process?
Sure. So as we sit here on the floor of the New York Stock Exchange and the market opens in, 20 minutes or so, all the millions of trades that happen at the open will settle tomorrow. And really the settlement cycle today is measured in days. And so there's good things to that. Today, DTC operates a clearing mechanism where we net much of the activity and there's benefit to the market. But much of the market, as I mentioned, is measured in days. So repo happens on an overnight basis, securities lending as well. And what we were able to demonstrate a few weeks ago was that we can do this and compartmentalize that to minutes, where you can have transactions settled in near real time. You can have repos that are not just overnight, but 15 minutes or minute increments. And that really is an unlock for the market.
And when we're talking about tokenization, of course, institutional adoption as well as investor protection is key here. So walk us through this concept of the digital twin.
Sure. So a digital twin really means that the asset that sits in traditional form on our books and records is exactly the same as the token that's on a blockchain. Effectively, the blockchain becomes an extension of our books and records, and DTC, as a CSD, a central securities depository, offers trust. Trust is in our name. And really, we maintain the entitlement rights. They're the same as in traditional form as they are in tokenized form. And again, that really brings the market the ability to have liquidity wherever they want it.
And we are talking about a highly regulated industry. So as you count down to October, walk us through the operational as well as the regulatory steps that are necessary.
Sure. So in some ways, the regulatory steps have already been taken. We received a no action letter from the SEC last December, and that spelled out in great detail what it is we could and couldn't do. And it included both the range of assets. So it's really a wide range of assets. So the Russell 1000, the makeup of the Russell 1000, ETFs tied to major indices, as well as US Treasuries. So it's really a substantial portion of the market that's included. But also in that no action relief, it spells out the time frame for which we can operate. So once the clock starts ticking in October, we have 3 years to be able to build and grow and make this a success.
And finally, before I let you go, as you reflect on that July 15th experiment, give us your take on some of the surprises and what you learned from them.
So really, one of the surprises is that it almost went perfectly to a T. We really were able to execute all the transactions from the time we started. So it was 8:30 or so in the morning to about a little afternoon. And the sequence of activity really went quite smoothly. And even when things happened, this is the speed of the internet, where if something needed to be adapted or changed, we added a new wallet address for a client, we can do that in real time. And so that we were able to demonstrate both that, yes, we could be successful in executing these transactions, and yes, we can move money at securities at the speed of the internet.
Mm-hmm. And of course, when we're talking about the long-term impact, we're not just talking about the second half of 2026, but also 2027 and beyond. So what do you think the impact will be once this launches?
Sure. So we're really expecting a number of things to happen over the course of time. One is when we get to the launch, it will really be an incremental process. So we will add features and functions along the way. We need to do things in a very secure and sound way, but we're expecting collateral management to be the first unlock. And that really comes down to unlocking trapped liquidity and to be able to move money and assets more quickly. And so that's the first thing that we expect will scale. But we also see a push towards retail adoption, where there's a real desire to have a wallet-based infrastructure for retail assets, to have the same assets, regardless of what type of asset it is, to sit in a wallet, whether it be crypto, whether it be securities, whether it be digital cash. And so we're seeing that as a driving factor for adoption into 2027.
Well, Tom, I appreciate your time. Thank you so much for joining us today here at the New York Stock Exchange.
It's been a pleasure. Thank you.
Thank you.
I got you. Okay. Welcome back to the show. Joining me now down here on the trading floor of the New York Stock Exchange, Dileep Rao is the CEO of ShareBite, a corporate food and employee meal benefits platform. A lot more than that as well. It's really nice to see you here. Thanks for taking the time.
Likewise, JD. Thank you for having me on.
Let's start first and foremost with an introduction to what ShareBite actually is. What's it all about for people watching who might be a bit unfamiliar?
Yeah, ShareBite is an employee meal benefits platform, and it's built exclusively for companies. And our ledger allows companies to get very, very precise about offering their employees a daily meal stipend, no matter where they work. And our view is that, there's employee benefits. There always used to be policy one size fits all. Our programmatic ledger, of course driven by AI behind the scenes, is able to actually customize every single benefit. And we started with meals, but there's so much more.
Dileep, I know you like to say you are only as good as your people. What does that phrase mean to you? What does it actually look like in practice?
That means everything. I mean, at ShareBite, we say, the people work for the company and our customers, and like you work for them, right? The people that work there. But look, there's a lot of talk about AI and people and kind of, replacing people, which we know is not actually happening, especially in many end markets. Especially the AI companies are hiring in mass. We serve many of the most important companies in the country, many of which are AI companies that you all know and probably have on this channel, and they're also hiring in mass. So the best people, especially with AI today, is helping make people much more productive rather than just replacing them.
I love that. Talk to me a bit about Tap to Pay, the actual tech. What does this really look like in practice?
So we have a product called Passport, right, which is a programmatic ledger that sits behind every single transaction, every single meal benefit offered to every employee at our corporate customers. And they can get very, very precise down to the employee level based on where they work and how they work. So again, in a past life, it used to be employee benefits were all one size fits all compliance driven, all policy driven. Today, our belief has always been you have to build the policy into software, and you have to have that behind the scenes so that nobody actually comes in contact with an AI. It's actually doing all the hard work behind the scenes. So whether your employees work at a specific office or any office in the US, in North America, in Europe, we serve all these markets, or they're somewhere else in the world, or remote. Our ledger, our programmatic ledger, our Passport product is built to be able to serve all kinds of companies, all kinds of people, no matter where they're based.
Dilip, is it truly possible for a company at the same time to scale its business and scale its social impact? What does that look like?
Well, look, I think impact starts with not only what you do as a business, but how you treat your people. I've always seen, there's a lot of talk about productivity out there. And I see productivity from the lens of it's like a layer cake, right? There's the first layer of productivity, which is give people meaningful work, pay them fairly, give them an exciting place to work and, do their best work. And then you've got the second layer, which is like, just remove all the elements of friction out of, get it out of their way so that they can actually do their best work. And when it comes to productivity in general, I think that you have this insane opportunity to leverage AI to be able to, allow people to do their best work in this capacity.
Dilip Rao, CEO of ShareByte. Really grateful for your time, and I think we got some special guests here. Who we got here, Dilip?
These are my boys. These are my boys.
That's awesome.
They're historians too, just like their dad. So
okay, fair enough.
They love being in the capital of capitalism here.
Of course, like to call us the Yankee Stadium of Finance down here. You and your boys are always welcome. Future historians,
yes,
of course.
Yes, sir.
Really grateful for your time, and thank you guys for being here too. We'll talk to you soon, all right?
Thanks for coming.
Don't go away. A lot more Taking Stock coming up right after this. Welcome back to the show. Join us now down here on the trading floor, Blue Macellari, lead portfolio manager at T. Rowe Price. Just rang the bell down here on the trading floor. It's really nice to see you, and congratulations.
Thank you. Thanks for having me.
And let's talk all about the reasons that you and your team were just here to do exactly that, the launch of TKNZ, that's the ticker symbol, tokens. What is it, and what does it say about how mainstream crypto really has become right now, Blue?
Yeah, I think people were not expecting T. Rowe Price active crypto ETF and New York Stock Exchange. It's quite a combo, but yeah, we've launched the first actively managed spot crypto ETF. And we're excited to be in the market. We think that active management matters more in crypto than almost any other asset class. So we're excited to be here.
And if I'm not mistaken, it's a multi-token crypto ETF. We got a lot of other crypto-based ETF products we've been talking about on the show. This one sounds as if you're going about things in a bit of a unique way. What should people know there?
Exactly. So normally you have a passive multi-token or a market cap weighted, or the vast majority are sort of single name crypto ETFs that hold only one token. We run the portfolio much like you would a stock picking type portfolio. We go across the assets, do the research, and select the tokens for the fund.
How do you actively manage, to your point, active versus passive, actively manage a true one-for-one crypto portfolio? You're using research, you're using analysis. There's a lot that goes into this.
So we do fundamental research, and analysis is the sort of foundational layer. Above that, we look at sector, drivers of growth, user interface, how the team sort of functions, adoption, and then because it's crypto, you have to pay attention to momentum and trend on top.
Of course, and I wonder to what degree you have to follow general price action. We looked at earlier today, we talked about every day, Bitcoin is down about 49% off of those highs from October. How does tokens now positioned on the backdrop of, I think it's fair to say, a bit of a crypto bear market ongoing?
Well, we've been in a crypto winter, as we like to call it, prolonged bear market, for some time, but I think that's one of the places active management really matters. So we're positioned defensively right now, but if you look, people love to focus on Bitcoin being down 50%, 49%, depending on your date. Hyperliquid is up 128% year to date, so it's all about picking the tokens.
There is a fluidity to the world of the crypto markets. What does that mean in terms of active over passive management for a product like this?
So crypto trades 168 hours a week, 7 days a week, right? 365 days a year. Because we are an actively managed spot physical crypto, we can trade our underlying crypto assets all 168 hours a week if we wanted to, or if we needed to. And that sort of flexibility and agility in a market that moves this much with this much volatility is absolutely critical.
I've only got about 30 seconds left. What most excites you personally about a product like this at a moment like this, Blue?
So I think this is a great place to get into the market. We're excited to be launched here because we've been in a crypto bear market, and it's a great entry point for us. And we're just really excited to bring the first of its kind ever to market for a crypto ETF. It's a real trailblazer.
Blue Macellari, T. Rowe Price, tokens, TKNZ, right here at the New York Stock Exchange. Congratulations, and a great bell as well. Thanks for joining us today.
Thanks very much. Thanks for having me.
We got a lot more taking stock on the special Fed Day edition of the show from the big board. Don't go away. A lot more show coming up after this. Welcome back to the show. Time now at this hour for a few fintech, crypto, and AI headlines you need for your Wednesday afternoon. First up, all the crypto majors are in the red shortly after 4:15 p.m. Next up, OpenAI saying the AI models behind the recent Hugging Face hack. What a story that was. They also accessed a customer account on cloud platform Modal, raising fresh concerns about the risks of advanced AI cybersecurity testing. Finally, Visa set to cut about 7% of its workforce to streamline operations, as well as to shift investment towards new areas of growth, with AI helping reshape the way work gets done. And now Scarlett Sieber, of Money 2020 is back with a whole new edition of Hindsight 2020. That's, of course, where she breaks down key dates in financial history. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind back to July 2015. The Ethereum network goes live. At first glance, it looks like an extension of Bitcoin, another blockchain, another digital asset. But in reality, it represents a shift in what money can do. Ethereum introduces the idea that financial transactions don't just move value, they can execute logic. Smart contracts allow rules to be embedded directly into the transactions. If conditions are met, actions can happen automatically. No intermediary, no manual decision. That changes the nature of finance. From basic things like moving money between parts to systems executing agreements, that is a very, very big deal, people. If we fast forward to 2026, and whether in crypto, tokenized assets, or automated payments, the underlying concept remains very powerful today. Finance becomes programmable, but programmability introduces risks as well, of course. Code errors, governance questions, dependency on infrastructure. July 2015 wasn't just about a new asset. It was about turning finance into a system defined by code. That is your Hindsight 2020, because when money becomes programmable, control shifts from institutions to systems. And with that, back over to you.
What a day it has been today here on Wall Street, and what a day it promises to be tomorrow. We'll get you quickly caught up on what to expect tomorrow here on the street at 8:30 a.m. I'm already tired from this week. PCE inflation print in the morning, the latest quarterly results from MasterCard, Blue Owl, Stellantis, as well as Anheuser-Busch. This time tomorrow after the close of your Thursday trading day, Apple, Amazon, Roblox, as well as NYSE listed Reddit. Coming up in the next few minutes, we'll learn a lot more on the quarterly earnings calls for a few mega cap names, including Microsoft and Meta, a few consumer brands like Starbucks and Chipotle as well. Your final tail of the tape on this Wednesday, July 29th, Fed Day edition of the show. The S&P 500 in the red, 1.5. The Dow down 2.2 or so. The small caps, the Russell 2000 down 1.6%. Thanks a lot for watching this jam-packed Fed Day edition of the show. My special thanks to all of our incredible guests we had today. Thanks for watching today's edition of the show. Have yourself a great Wednesday night. We'll see you again tomorrow from the New York Stock Exchange.